Good evening, everyone. We begin tonight with IBM and Google. They are two iconic tech companies, two big disappointments, and two stocks that carry a lot of weight, one on the Dow, the other on the NASDAQ. We start with IBM. Big Blue's quarterly report out after the market close was another in a long line of revenue misses. Income continued to be hurt by sharp declines in hardware sales. IBM earned $2.54 a share, right in line with predictions, but revenue missed, coming in at $22.5 billion. That was less than expected. That sent shares initially lower in after-hours trading. Morgan Brennan has been looking through the report and joins us now to tell us more about it. So, Morgan, as you look through the numbers, what do you see as the key takeaway from IBM?
Well, IBM is a big company with many numbers, but one of the biggest takeaways here is that China and other emerging markets have continued to weigh on IBM's growth. So countries like Brazil, Russia, India, and China, revenue has tumbled in those countries about 11% from a year ago, but none more so than China. So revenues in the world's second largest economy, actually fell about 20% from a year ago. That's as demand for servers and storage products continue to fall, also weighing on the hard-hit hardware division of the company. And IBM says that's not likely to let up anytime soon. Investors have been piling into the stock recently, favoring its perceived stability and dividend. But whether IBM makes a good investment will ultimately come down to the fundamentals in four key areas: services, software, hardware, and emerging markets. The services division is by far the biggest, accounting for 60% of revenues. But it faces a number of challenges, including competition from cloud storage, which helps other companies reduce the need for tech outsourcing. IBM's second largest division is software, a bright spot thanks to its core infrastructure software products, business analytics programs, and cloud computing offerings. The real trouble has been in hardware, a division that lost $500 million in 2013. Analysts expect similar losses this year and hope that trend can be reversed by 2015.
The transition period now is getting away from some of the more commoditized stuff like hardware to some of the more higher margin value add services like the cloud.
But there's one area that's been crucial to IBM: emerging markets. Countries like China have accounted for double-digit growth in recent years. But that changed in 2013 when slowing demand for equipment dragged on the company's overall revenues. Still, the company has been implementing changes, and it says that they expect to see those changes push towards better growth in the second half of this year. We'll have to see whether that takes place. Tyler?
Morgan Brennan, thank you very much.